But today, what we're gonna do, we're gonna continue on where we left off. That gross up of supplemental wages, we want to go ahead and go through that calculation. I think I kind of explained it to you a little bit before we left, but I didn't really get a chance to show an example of how it works. So again, this is when you have an employee that the employer wants them to actually receive a certain amount in their paycheck. They want them to take home a certain amount. So, get this. Oops. All right. So, for example, let's say we have an employee that we want them to receive $1,050. That's their bonus. Net pay. How do we get there? We've got to work backwards in order to get to make sure that their pay is that what they get to take home is $1,050. So one thing that we need to know, piece of information that we need to know in addition to what we want their net pay to be, is what are the tax rates for the taxes that they are going to be subject to. So if it's a bonus, and in this case, I mean, we really would only be using this probably with a bonus, is we're going to use that 22%. That 22% flat tax rate for bonuses. Remember, if we talked about that last on Tuesday. We have Social Security tax, which is 6.2%, and we have Medicare tax, which is 1.45%. And let's just throw in a state tax rate as well. We'll say that it's a state income tax of 3.8%. That's Iowa's flat tax rate now that we have a flat tax system. So what we need to do is we've got to add up all of these tax rates because it's going to factor into what our equation is. So we need to know what our combined tax percentages is here. Now, I don't have these in decimals, but you're going to want to do it in decimals because what we have up there is 1.0 minus the percentages, and so that 1.0 represents 100%. So that is in a decimal format. So let's add up all of these. So 22 plus 6.2 plus 1.45 plus 0.8. So 33.45%. To convert that to a decimal, we're just going to move that over. So 0.3345 is what we're going to use. Here's the equation. We want our net pay desired, which in our case is $1,050, divided by 1.0 minus our combined tax rates. So 1.0 minus 0.3345. That comes out to 1050 divided by, is that 66? 66.5. 0.6655. You do the math on that. $1,577.76. That's our gross pay. Now we're not done yet. Yes, we figured out our gross pay, but we've also got to calculate what our taxes are. So we take our gross pay, $1,577.76, 22%, 6.2%, 1.45%, 3.8%. We're going to figure out how much the taxes are on for each of those. 1577, 76 times 0.22, 347.11. So we're going to withhold 347.11 for federal income taxes. 97.82 for Social Security taxes. $22.88 for Medicare taxes. $59, that will round to $59.96 for state income taxes. And then we do the math. $104,999. All right, we're 1 penny off. It's all right. That's pretty close. What we're going to do is we're going to add a penny up here. We're going to make this 77, so that then makes this 1,050. So if you are off because of rounding, because we're using those percentages, what you do is you adjust the gross amount by the amount needed. So if this had come out to 1,050.01 cents, we would subtract a penny up here. But you should get very close. You should really be within a penny, maybe 2 pennies. If you have 2 of these rounded, kind of funny. But you should be within a penny or 2. If you're not within a penny or 2, then go back and do it over again and make sure you did it right. Okay, so in addition to, we need to do this because we need to know how much is being withheld for each of those taxes. It also acts as a check on our math to make sure that we did it properly. Any questions about that? It's really, a lot of students seem to get kind of caught up in it and think it's difficult, but it's really not. So you just want, again, remember, whatever pay you want them to walk away with, and then 1.0 minus those combined tax rates. Any questions about that process? Okay. Let's move along. So what I want to talk about a little bit now are the different tax forms and reporting forms that are issued on an annual basis. The main ones that we're concerned about for payroll purposes are the W-2 and the W-3 form. Most students are familiar with the W-2. If you've ever had a job, been an employee, then you have probably received, well, you should have received, a W-2 form. And what the W-2 form does is it reports for each individual employee the total amount of wages that they received during the year. Well, the total amount of taxable wages that they received during the year and the total amount of withholding from those taxable wages. So it is prepared on an annual basis. It has to be issued to the employee by January 31st. So right now we're in 2025. All of the wages and withholdings that are occurring during 2025 will be compiled on each individual employee's W-2 form, and that will be issued by January 31st of 2026. The employee then uses that form to prepare their individual tax return. So the purpose of the form is to report both to the IRS and to the state how much the employee earned during the year and how much the employee had withheld from their paycheck during the year, but then also to provide that information to the employee so that they can then prepare their tax return, their individual tax return. And one of the reasons why you really can't, employees have a difficult time reporting an amount that is different from what's reported on their W-2. So for example, let's say they made $50,000, but they want to say they made $40,000 on their tax return. Really difficult to do that because the IRS is also getting a copy of that W-2. They know exactly how much the employee has earned. And the state is getting a copy of it as well. This is an example of what a W-2 looks like. And like I said, I'm sure a lot of you are already familiar with what, let me make this, see if I can make this just a little bit bigger, with the information that is on this. The format doesn't necessarily have to be like this. This appears to be a W-2 that's printed on half of a page. Sometimes the W-2s they're printed 3 copies to a page. Sometimes it's 2 copies to a page. Sometimes it's 4 copies. It'll be a W-2 in each quarter of the page. The employee is going to get several copies of the W-2 because they're going to need it. In the olden days, when we actually filed paper returns and we actually mailed in tax returns, we would attach a copy of the W-2 to each of the tax returns. So if you were filing a tax return, sending it into the IRS, sending one into the state, you'd have 2 copies, and then you'd want to keep a copy for yourself as the employee. But the information that's contained on the W-2s is consistent regardless of the format that's used. But there is no real standardized format other than it has to contain this information. So up at the top here you see this is the payer, so the employer information is here along with their employer identification number. Also up here is the employee's social security number. Oftentimes this is masked these days. Maybe it will only indicate a couple of the numbers there just to verify that, yeah, that's probably right, but they'll mask it for privacy purposes. So employees and social security up there, employee's name and address here, and then all of the wage and tax information over here to the right. You'll see there's several boxes. So the boxes mean different things. On the left-hand side up here are the wages, the amount that was taxable, the amount that was subject to the tax that's then listed over to the right. So box 1 are the wages that were subject to federal income taxes. That's not necessarily total wages, right? That's not necessarily gross wages. These are the taxable wages. What we arrive at here, you know, the amount that we are actually using to calculate the tax. So it would exclude any pre-tax fringe benefits. It would include any taxable fringe benefits that the employer provided. So it's not necessarily the total amount of cash, it's going to be the adjusted amount. But what it is a total of all of these amounts for every single pay period in the year. Over to the right is the amount of federal income taxes that were withheld. So all of those calculations that we've done for the entire year for each employee, that's how much that totals up to, the federal income taxes. Next line down, so, and we refer to these as like by the box number. So when you're in tax and when you're working in tax or when you're working in payroll, you become very familiar with, you know, if I were to say box 1 wages, you would know automatically what those wages, what I'm talking about. So box 1 wages are wages that are subject to federal income tax. Box 2 wages are wages that are subject to Social Security tax. So box 1 could be different from box 3, right? Because box 3, remember, we've got that Social Security wage base, so in 2024 we would never have more than $168,600 of wages that were subject to Social Security tax. So box 3 in 2024 would never be over that amount. But box 1 could be over that amount. If we have an employee who made $200,000 and $200,000 were subject to federal income taxes, they'd have $200,000 here, but they'd have $168,600 here, because that's the amount that was subject to the tax. Also, if they had some pre-tax deductions, so remember, retirement contributions are pre-tax for federal income tax purposes, but they are not pre-tax for Social Security and Medicare tax purposes. So we would have, those wages, that amount that was contributed would not be included in box 1, but it would be included in boxes 3 and 5. And I'm actually going to point out how they made a mistake on this W-2 here in our example. But the corresponding Social Security and Medicare taxes then for box 3. So Social Security taxes withheld, box 4. Social Security wages, box 3. So the corresponding taxes that were withheld for those wages are listed over to the right. Box 12, you see there's 4 boxes here. This is for pre-tax deductions. So, and here's where they made a mistake. So code C, each of these types of deductions has their own code, their own letter code. So code C is for retirement plan contributions. So this means this employee contributed $78 toward a retirement plan during the year. Code W is like HSA contributions. Code D, code, I can't remember if it's code D or code DD, is for health insurance contributions, but each type of pre-tax contribution has its own code. That's usually printed on the back of the W-2 so that the employee, when they're using it, they can look up the code easily on the back page. This code C is for a retirement plan contribution, which means it should have been pre-tax for federal income tax purposes, but not pre-tax for Social Security and Medicare tax purposes, but they've got the same amount of wages. Now, down here is the state information, and they did make that adjustment on the state side in this example. So if you see 292,360.18 for taxable federal wages, 292,282 for state wages, that means that what they did was they subtracted this 78 from here, and that's how much is taxable for state purposes. It really should be the same. Those two should be the same. Couple other things to point out. So box 13, you can see there are some check boxes there. One is for if the employee is a statutory employee. One is if the employee contributed to a retirement plan, which is checked here. So that's how I know that's code C. And then there's also for third-party sick pay. That would be for like disability pay if it was, being issued by some disability insurance provider, AFLAC, something like that. That would be checked. Box 14 is just other information that the employee may need in order to prepare their individual tax return. So you can see they withheld $296 for Blue Cross Blue Shield insurance premiums. Again, for some reason it's not, well, it may be showing up as pre-tax, but normally that would also be listed over here with a code. So I'm not quite sure why in this example that wasn't listed with a code. And then this Pennsylvania SUI, so that's state unemployment insurance. In the state of Pennsylvania, you'll learn in the next chapter, in the state of Pennsylvania, employees have to contribute toward the unemployment insurance. In Iowa, that's not the case. Most states, that's not the case, but in this case, they're in Pennsylvania, so they have to contribute. They contributed $20.55 to the state unemployment insurance fund. State information down here, so the state name, and you can see there's space for more than one state. If the employee worked in more than one state for the same company, it would be listed there. This is the state's ID number. State wages, state income taxes that were withheld, local wages, so in this case they lived in Philadelphia or they worked in Philadelphia, and Philadelphia has a local income tax. So, and the local income tax was actually higher than the state income tax. But them. So they've also had withholding for the local income tax. So each employee gets one of these forms, and the W-2s, let me erase this here. So the W-2s are issued to individual employees and it issued by January 31st. It has to be issued, and it summarizes wages, also tips, bonuses, commissions, all of that would be wrapped up in there. I'm just going to say wages and taxes withheld, so that the employee can then prepare their tax return at the end of the year. All of the W-2s are added up, so all of the box 1 wages are added up, all of the box 3 wages added up, box 5, all of the federal income tax withheld added up, and all of that is then reported on what we call a W-3 form. Let me see if I can find one. Your book doesn't have one. This is what a W-3 form looks like. So on the W-3, this is a total of all W-2 forms. So you can see here, same boxes, box 1 wages, box 3 wages, box 5 wages, that would be a total for all the employees. So all of the W-2s, box 1s would be added up, that's what's going to go on the W-3. What's the noise? Mute it, please. So all of that is going to be totaled then on box 1. All of the box 3 for each individual W-2 is going to be totaled. It's going to end up on this W-3. Employees do not get a W-3. The W-3 is, there are several copies of it, issued to the IRS, issued to Social Security, and then the employer also keeps a copy, and it's issued to the state. So you can see there's a place down here to total up all of the state wages as well. So this is just sent off to filed with IRS, Social Security Administration, State Tax Authority. So it reports to these agencies exactly how much was paid, how much was withheld for the whole year. Now, the total of the W-2s has to equal exactly the amount that's listed on the W-3. Okay, so also the total of the W-3, so the total of W-2s equal W-3, also has to equal all 4, total of all 4. Those 941 forms that were issued, remember each of those breaks down the amount of wages that were paid for the quarter, federal income taxes that were withheld for the quarter, Social Security taxes, Medicare taxes. It breaks down all of that stuff by the quarter. All 4 of those total also have to reconcile to the information that's on the W-3. So all 3 of these items have to agree with each other and have to reconcile. This is one of the reasons why January is an incredibly busy month for payroll professionals, because they're working on all of this. They're working on getting it issued. Also, they've got 941s that are due by the end of the month for the last quarter of the previous year. So January is an extreme, tax, tax preparers have their busy season February through April. Payroll professionals have their busy season. Well, they've got several busy seasons throughout the year, but their really busy season is the month of January, where they've got to get all of this information in. In addition, any questions about the W-2 or the W-3, how they relate to each other? In addition to the W-2s, and like I said, that's really the report, that's a reporting form. It's just reporting information to the employees and to the different government agencies. There are other types of reporting forms, annual reports that report different types of income. Now, usually the payroll professional doesn't have to worry about completing these forms. It's usually the accounting department that'll probably complete these, but we'll just kind of go through what they are. So they're 1099 forms, and they just report, just like with the W-2 is reporting income, the 1099 forms also report income, but different types of income. So the W-2 is reporting wages, tips, all that kind of income, any type of earned income. The 1099s report different types of income. 1099 DIV form reports dividend income. So if you have a stock and it pays a dividend that you received during the year, it pays 4 quarterly dividends. If the total dividends that were received exceed $10 for the year, then the individual who's receiving the dividends is going to get a 1099 DIV form that reports that amount that they'll then use on their tax return to help prepare their tax return. 1099 INT is for interest income. And again, if it's $10 or more during the year, then the individual is required to receive a 1099 INT form. If it's less than that amount, that threshold amount, the payer doesn't have to issue the form. Sometimes they will anyway. There's no restriction that they can't issue it, but they are not required until it reaches that annual amount of $10. 1099G is for government payments, most commonly for unemployment compensation and for state and local tax refunds that were received. If you've ever filed your taxes and you've received a refund from the state of Iowa, you'll be familiar with the little postcard that they send out. They send out this little postcard. It's one of those annoying pieces of paper that you have to rip off the edges of it in order to open it up and get the information. But that's a 1099G. It indicates how much the taxpayer received in state refunds during the year. 1099 miscellaneous is just that. It's for miscellaneous types of income. So rent income is reported on a 1099 miscellaneous. Royalty income is reported on a 1099 miscellaneous. Any kind of other type of income that doesn't have its own form is going to be reported on a 1099 miscellaneous form. 1099 NEC is for non-employee compensation, which is that independent contractor income. Now the threshold for reporting on a 1099 NEC is $600. So if an individual receives $600 or more from a single payer, remember the threshold applies to the payer. Did the payer pay $600 or more to this individual during the year? So if they paid more than $600, they have to issue a 1099 NEC form for that non-employee compensation. And because it's non-employee compensation and it's for independent contractors, those independent contractors are going to be subject to Social Security and Medicare tax in addition to income taxes when they file their tax return, but that gets reported there. 1099R is for retirement and pension income. So if you are retired and you are receiving any type of payment, or even if you cashed out your retirement fund, that sort of thing, it gets reported on a 1099R form. And again, all of these forms, and there are a lot more than this. This is just a small sampling of the different types of income and reports that are sent out to taxpayers every year for different types of income that they receive. But all of these then have to be used in preparation of the individual's income tax form. The 8027 is just for large food and beverage establishments to report the amount of tip income that their employees received during the year. Okay, so that gets filed with the IRS. All right. Any questions about any of those forms? So we're going to move on to talking about. Let me get this.